Hello there, I'm real estate economist Matthew Gardner, and welcome to this month's episode of Mind the Market. Over the past several months, a lot of people have been asking me whether I expected to see US home prices fall, and, well, given the run-up in values we saw during the pandemic, I'm sure many of you have been asked the same question. Given that it's a topic that's front of mind for many brokers, homeowners, as well as would-be home buyers, I thought it's worthwhile chatting about. So the question today is, have we bet too heavily on the housing market? Let's start by taking a look back to see what happened that's making some people, including myself, rather anxious. What's troubling many is shown right here. Price growth in 2020 and in 2022 was certainly significant, but the increase in 2021, well, it brings up memories of the run-up in prices we saw before the housing bubble burst. In fact, the pace of growth shown here, well, far higher than we saw in any year in the early 2000s. And the reasons prices rose so quickly during that time are actually pretty straightforward. COVID allowed households to move, and many migrated to areas where housing was more affordable. As you can see here, a lot of them moved to the cheaper Sunbelt and Mountain State markets. Mortgage rates were slashed, with the Fed actively buying treasuries and mortgage bonds. And cheap money, in concert with buyers moving to locations where home values were very attractive, it drove prices in some of those markets into the stratosphere. And finally, although builders recognized the significant increase in demand, they were generally unable to deliver product as fast as was needed, and that put upward price pressure on existing inventory. But nothing good lasts forever. The end of quantitative easing in 2022 saw mortgage rates shoot up. And the real impact of higher borrowing costs, it hit the following year. Sales plummeted, but nationally, prices still managed to keep their noses above water. And in 2024, to the surprise of many, even as inventory levels rose further and borrowing costs stayed high, prices still increased. And that brings us to where we are today. In September, listing activity is up pretty significantly year on year. Sales have picked up, well, even as listing inventory grows, and US home prices, they're still rising, but the pace of growth has certainly slowed. That said, all markets are not created equal, and many that saw huge run-ups in prices, well, they've seen them erode. As much as almost all those shown here continue to see prices falling, the pace of drop has slowed, but I'm afraid it's going to take some time for any significant recovery to start to take place. However, what's worrying me more is shown here. The income needed to buy a home in the US has more than doubled since the start of the pandemic. It's off its peak, but wage growth has not kept pace, and this will certainly be a headwind when it comes to future home price appreciation for all homeowners, and that actually leads me to my biggest concern, and that is my fear regarding first-time home buyers. As you can see, last year, their share of total sales was the lowest on record due to major affordability issues across the country. There are 51 million people in the US aged between 25 and 35. They're getting going in their careers, and they're starting to form new households, and home ownership is still their goal. But will they get to benefit from owning their homes? I'm afraid unless things change, I fear that many will not. We have not seen the national housing market collapse, as some had predicted. I simply don't see any reason to believe that it will. In fact, in the third quarter of this year, of the 229 metro areas that the National Association of Realtors tracks, 76% saw sale prices rise versus the third quarter of 2024. However, there are significant headwinds. As you saw, some markets got, out over their skis, and they're certainly seeing prices correct. But given that I don't expect to see a broad-based price correction, and I certainly don't, I'm afraid, anticipate mortgage rates dropping far from where they are today, the biggest hurdle, well, it's going to be faced by our younger households, and that is my biggest worry when it comes to the US ownership housing market. In most cases, Well, they're the first link in a chain of transactions, and without a robust pool of first-time buyers, I'm afraid the market is going to remain out of balance. There you have it. I hope you found my comments to at least be of some interest. If they are to you, well, you can subscribe by hitting the link below. As always, I'd love to know what you think about this topic, so feel free to leave me any thoughts you may have in the comments section. And if there's a topic you want me to cover, let me know that as well. Until we see each other again, please take care. I'll be back again next month to take on another topic that's of interest to real estate professionals and their clients. Bye now.